Hey traders, Nick Shaheen looking at Norwegian Cruises. NCLH ticker. It is amazing, mind-boggling to me that these companies are still hanging on. Kudos to their fans, kudos to their managements. The pandemic was an amazing, amazing disruption, but they're hanging in there. So it's not a secret that their financials are in shambles through no fault of their own. One day they're in business, the next day they're not. And hopefully the vaccine is getting people ballsy at taking cruises again. I know people who cruise love it, but they're going to lose the fringes. Like I will never take a cruise again, not from the virus, because I just didn't like him to begin with, and personally. But that doesn't mean the stock should go away. All right, so today is the opportunity on the stock. Is this a spot to catch the falling knife? It has given up quite a bit from the. Let's put a quantification on that. By the way, nothing in here is a recommendation to buy or sell. I'm merely showing you how I update my charts. Somebody just asked me in the chat room. They said, actually, they didn't ask me, they said it's revisited the neckline. And it just got me to thinking, hey, I haven't looked at this chart in a while. Let's do a video. And I will update my lines live. You will see the old lines. You'll see how the comments that I made months ago, if they were correct or not. And the levels that I pointed out, are they correct or not? So for me, first of all, I have to look at the whole picture. And this is not a good, easy place to get started long on anything. That's the SPY. So there's risk from that. So if the S&P corrects for whatever reason, even just a 5% dip, that will put downside pressure on everything, including this guy. So you have to keep that in mind. So any comments I make here is in the vacuum of, hey, let's assume markets don't do anything different than they've been doing. This is a daily chart. Let me see here. Is it? Yep. So this is about a year's worth of data. I'm curious. Where is the pandemic? Okay, so good. So this makes sense. So the pandemic cliff, they're not there yet, which makes sense. They shouldn't be. They still have a lot of stuff that's stopping them from doing whatever they need to do. Whereas if you look at other indices, industries like Starbucks is way above this, which makes no sense. This is a better reaction. So the investors are realistic. Even though they're big fans, they're realistic with their expectations to a degree. So it's hard to quantify it because the fundamentals are on hiatus. So we're stuck with the technical. So what are these orange lines? Those are my alerts to get long. So I know there should be buyers somewhere here where it's at 28 to 27 and a half. There will be buyers. Eventually, I think into 27.2, there will be buyers. I would rather buy it down here if I have the chance. If not, so be it. That's fine for a swing trade. So let's put my lines. These are my old lines, and I'm going to zoom in on them. Okay, so I have this white line from before, way before. Whoa, when did this line start? Anyway, we'll hunt it down later. Back to reality. There we go, and zooming in a little bit. All right, so these are the old lines. Breakout line number 1, I put right here. They used it to break out. They came back and touched it. Remember, I did this months ago. To the penny almost, and bounced off of it. They tried to hold it. They couldn't. They fell into they sliced through 3 levels of resistances that I have, and they stopped just above the set of supports that I have. So at the time when I drew this, price action was somewhere in here. It had a whole bunch of resistances above and a whole bunch of supports. So that told me that it's a zone of contention. Sure enough, it served its purpose. When you're falling into a prior zone of contention, it provides breaks on the way down. It's like falling onto a mattress, as they say, because they are active. In fact, that orange line I did not draw. Look, I take my drawings out. That's automatic. This orange line is the actual busiest price point. So the most trades for this period of time happened at 24.2. That's a fact. It's not my opinion. That's a fact. So anywhere around it, see these 2 bars, anywhere around it is going to be busy. So if you're falling and there's an imbalance of buyers to sellers, like the eagerness with which you're buying and selling, they come to here, they both love it as much, boom, 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 they slow down. They bounced, they stalled a little bit here, overdid it, and now they're coming back to reality. So what's red blue? This is pure simple regression. So reverting to the mean. You overshoot up, you revert to the mean, you overshoot down, you revert to the mean, you shoot up, reverting to the mean. So if nothing changes, one would assume at some point they're going to come back to the mean, but from what point, right? So my bet is that it could be lower, just because I am a little bit bearish on, not bearish, I expect a give back in the indices at some point. This is not healthy the way we're doing it. Then because somebody sneezes and then we correct 20%. Why not just drop 2% here and there? Anyway, so back to the lines. We'll put them back on. The goal was to change the line. So every line that says that, I would change to support and extend it to the right, because it's going to serve as support. See, 335 will get us there. Whoop, too long. 320. Whoop. There we go. That will get us there. 300. So that's the same line. I merely changed the color and extended it to the right. That would be where just about where I'd start looking for selling credit put spreads, or doing whatever, however you trade. You buy stock, you buy calls, debit call spreads, all work. I'm going to take one line out because just overkill, and I'm going to say it's a support zone because that's what it is. Support zone. There we go. And we can take that line. I can extend it right. It'll be perfect. I'm going to take this out. That played out and then some. And support zone right there. I can delete these, because they're just visual noise. Great entry spot. Yeah, no kidding. Breakout line 2. We'll take that out. Just noise. So here's the cleaned up version. It is falling into support. Buyers should show up here, and if they don't, they will show up definitely here. I would be surprised to see this fail, or even this fail, in this environment. Now, if the SPY corrects, this will probably correct as well. But I have alerts to get long. So here's how I use this information if I'm already long. If it's falling and I wake up and it's fallen into here, I don't get out. That's not where I get out. It's too late. It's going to find support. Wait until it loses that, then get out. That's what I would do. If I'm looking to get long, that would be an entry point. I know it'll be scary. That's why I put these alerts. I put the alerts, and I said to myself, long, tight, tight, stop. But I put long in caps because I want to convince myself to do it, because it'll be scary, like pins today falling 9% out of the blue, or whatever, 8%. People will be panicking, but that's where I would be looking. Okay, there's an opportunity there. So if this falls on whatever, and there could be an opportunity. So I don't panic out at support zones. If it falls into this zone, I wait it out. It's too late. I should have stopped myself out here. But that's how it is. How about on the upside? On the upside, if it breaks out of here, it's a trigger with one last breakout with one R above. So this one. If they take both out, they have open air, but not really, because they have a catastrophe going on over there. I want to see what those two white lines are. Where are they coming from? I mean, this is a weekly chart, 5 years. Jeez Louise. Okay, so now I went to whenever they started, 2013. So these are lines that I drew a while back. Interesting. This is where we are right now. This is the range that they established right out of the gate for a long time. These are monthly. Every candle is a full month of action. So a bullish month, they spent months and months and months consolidating before they broke out. And now they fell below it, and it's the wall they're dealing with. All this junk. And look, that's the place where they bounced hard. So that's the place where they tried to hold, and they couldn't. And that's the place that's stopping them now. You see how technical analysis helps you get a big picture? Logic, plain simple logic, no emotions. People love the stock, people hate the stock, so they act irresponsibly. Anything up here is fair game for, okay, we'll take that out, but BS. So, logically, so I use logic. So this was the consolidation zone. It served as a base. You can see it months and months of consolidation, and then boom, they came back to it, support. They came back to it. They tried to hold once this month. Then, the pandemic was just too much. Down to zero, basically. What an entry point. Ballsy. Man. Nice. Came back to it, like almost to a T. In fact, look at this and these. So, it is point of contention. It will work. It will take a lot of work to get up there. First, get back into these two white lines, and then ping pong inside of them, and then slingshot out of them. How? I don't know. Cruises? So that might do it, but you have to be realistic that it's not going to be easy, or it's going to need one fantastic headline. All right, hopefully this helps somebody just look at charts differently. In the absence of fundamentals, why wouldn't anybody consider charts? And charts do work. In the last 3 videos, I've gotten good responses from sharing proof that charts work. I'll show you. Bear with me. If you've seen it, you can hang up, hang up, go away. I'm trying to find something specific on the S&P. 120. Let me pause it. Oh, there it is. Okay. You see this? That's that last correction that launched this huge rally. When we were here, somewhere in the starting of the correction, people freaked out in the chat room. People freaked out on CNBC probably. I haven't watched it in a year, and not in a year, this year. So what I did, I said, let me see if I can get clues from prior corrections, how they unfolded. So the way I drew these buttons, this line, that turned out to be exactly how the thing unfolded. What I did is I copied the reaction to the last correction before that. This was the correction. So there's something called, this is TradingView. There's something called Ghost Feed, and if you touch the points, it will draw it for you. And I copied and pasted, and I moved it over to here. And look how the price action unfolded exactly the way it unfolded back then. When I did this, we were right here. I didn't get much attention from anybody. And then when we started being up here, and like, oh, wait a minute, this thing is playing out. And look where it ended before that huge pop on whatever happened here. And again, this is the SPY. So if you're ignoring technical analysis in this environment when machines are doing most of the trading, I don't know, you're missing out on a whole bunch of tools. And this is another visual reason why a small dip is not so bad. What is that, 2%, 3%? Not even 2%. So 3% would cover this gap right here. This is a 2-hour chart. Every candle is 2 hours. So it just doesn't look like a good starting point for anything. But that's not stopping people. All right, Nick signing out.